As we start 2021, there are still a lot of uncertainties in the markets, even though the markets seem to be booming. With the new office being sworn in, stimulus payments and additional stress on national debt could likely cause the stability of the US dollar to start wavering. In times like these, investors are always looking for ways to invest in assets that are safe, that will appreciate over time, and continue generating income along the way. In this video, I'll discuss the top dividend aristocrats to invest in for 2021 and beyond. I will also discuss what the dividend aristocrats are and how these companies can provide handsome returns on your investment while paying you growing passive dividend income on a consistent basis. By following these steps outlined in this video, you can create a simple dividend income producing portfolio that will appreciate over time, substantially increasing your wealth during the process. Get ready. You are now entering the Academy. Dividend aristocrats are S&P 500 index constituents that have increased their dividend payouts for 25 consecutive years or more. There are just 57 companies that fall under this category. Dividend Kings are similar to dividend aristocrats, but have been increasing their dividend payouts for at least 50 consecutive years. You will find the Dividend Kings in the list of the aristocrats as well. A dividend aristocrat is a company that not only pays a dividend consistently, but continuously increases the size of its payouts to shareholders. Most are recession-proof, enjoying steady profits in good times and bad. Investing in companies that have been able to move forward through all types of environments and economic cycles is one of the wisest decisions a savvy investor can make. Let's look at a breakdown of what the dividend aristocrats are. The dividend aristocrats are overweight in the consumer staples and industrial sectors, comprising approximately 45% of the dividend aristocrats. Interestingly, the dividend aristocrats have little exposure to the technology sector, only representing 1.8% of the aristocrats, where the technology sector is the largest component of the S&P 500 index, representing 22% of the index. The Dividend Aristocrat Index is filled with stable, old economy blue-chip consumer products, businesses, and manufacturers. Some of these businesses include 3M, Coca-Cola, and Johnson & Johnson. These boring businesses aren't likely to generate 20% plus earnings per share growth, but they're also very unlikely to see large earnings drawdowns as well. Stable dividend growers like the dividend aristocrats tend to slightly underperform in bull markets and outperform on a relative basis during bear markets, making its 2020 year-to-date performance even more impressive. But the performance of the dividend aristocrats shows that boring, established blue-chip stocks that increase their dividend year after year can significantly outperform over long periods of time, just like the Dividend Kings. And as can be seen by the following chart, dividend aristocrats significantly outperform and provide a safety net during years of recessions, as can be seen in the dot-com bubble years of 2000 to 2002 and the financial crisis of 2008. Now I'll discuss the top 5 dividend aristocrats to invest in for 2021 and beyond, keeping in mind a possible recessionary period coming in the near future, as well as both growth appreciation and sustained dividend growth that will continue through the foreseeable future, makes these great investments with dividend income into 2021 and beyond. And now we have the top 5 dividend aristocrats for 2021 in no particular order. First is Exxon Mobile, ticker symbol XOM, a dividend payer since 1911 and a dividend increaser for 36 consecutive years. This dividend aristocrat is a solid company to invest in. Exxon Mobile is an integrated oil and gas company that explores, produces, and refines oil around the world. The company is the world's largest refiner with a total global refining capacity of 4.9 billion barrels of oil per day and one of the largest manufacturers of commodity and specialty chemicals. Although cyclical in nature due to the oil industry in general, Exxon, with its price to sales and price to book values of approximately 1 and 1.1 respectively, and a PE ratio of 61, is still an undervalued stock and a great one to invest in with a robust 7.27% dividend yield. With its current value of $48 and a fair value of $74, there is definite room to grow your ROI while continuing paying dividends into the foreseeable future. Second is 3M, ticker symbol MMM. A dividend increaser for 60 years, this Dividend Aristocrat and also Dividend King has paid dividends for more than 100 years now. Another company in a cyclical industry, 3M has a huge, diversified portfolio spanning multiple product lines and brands. But 3M is also an undervalued stock with its current price at $165 and its fair value sitting at $199. There is still room for appreciation. And with a dividend yield of 3.55% and with projected double-digit annual dividend increases continuing into the near future, 3M is a great dividend aristocrat to invest in. The third Dividend Aristocrat is a top telecom and entertainment play. AT&T is the largest U.S. telecom company and provides wireless and wireline services to retail, enterprise, and wholesale customers. The company's wireless network serves approximately 124 million mobile connections with 77 million post-paid subscribers. While AT&T's traditional wireline voice business has undergone a period of secular decline due to wireless substitution and cable competition, the company, through Warner Media, has become a diversified media and entertainment business. The third quarter results show solid subscriber growth in the company's market focus areas of wireless and fiber broadband, while continuing to reflect strong cash flows, financial strength, and business resiliency. AT&T has also updated guidance and now expects 2020 free cash flow of $26 billion or higher, with a dividend payout ratio with a percentage in the high 50s. AT&T also is currently accepting bids for the firm's DirecTV stake, and while it will be a big loss, it will help the firm continue to cut expenses. With investors receiving a 7.32% dividend yield and a $36 near-term price target, AT&T stock is heavily undervalued at its current price of $28.75. The fourth is AbbVie, ticker symbol ABBV. AbbVie is a global pharmaceutical giant. It has a $119 billion market capitalization and sells its products in more than 170 countries across the world. The company is a free cash flow machine and its dividend is safely covered. It leaves investors with a 5% yielding dividend champion that is growing. EPS is in the double digits and is also expected to continue its streak of high single, low double-digit dividend hikes. The last dividend raise announced in January 2021 comes in at 10%. And still, despite such stellar dividend growth amid revenue headwinds, the company's cash dividend payout ratio still remains below 50% and thus leaves room for more growth. AbbVie is still undervalued at its current price of $103. With the expected revenue growth, appreciation, and dividend growth expected going into the next decade, AbbVie is in position to be a great dividend aristocrat investment. Finally, we have Altria Group, ticker symbol MO. This consumer staples constituent is considered a sin stock. Altria Group, Inc. is an American corporation and one of the world's largest producers and marketers of tobacco, cigarettes, and related products. A dividend increaser for the last 50 years, this Dividend Aristocrat and also Dividend King makes increasing its dividend a top priority in its business model. Altria's current dividend yield is a whopping 8.3%, while it's undervalued at 36%, making for a great ROI for your investment. There's not much else to say about this investment, as it could be one of the best dividend income plays in the stock market for 2021 and beyond. Dividend aristocrats are safe dividend stocks that have proven to grow their dividends through different economic cycles and recessionary periods. This translates into growth, stability, reliability, and because they are dividend-paying companies, continual passive income. All these are essential elements necessary for solid investments that a savvy investor would gladly take up in their investment portfolio. Investing in these companies can give an investor the power of growth appreciation along with passive income growth, two primary components of a solid investment strategy for the long-term investor. Check out the links in the description to get started on creating your very own 2021 Dividend Aristocrat portfolio that will keep paying you passive dividend income into the foreseeable future. Thank you for watching this video. Please make sure to smash the like button if you enjoyed watching. It will really help out the YouTube algorithm for bringing more passive income strategy videos to the masses. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.